Welcome back to Golden Roll Radio. And boy, what an incredible rise in the dollar we've seen. We've seen the dollar index just continue going up, basically defying gravity. Inflation numbers are super high, but yet the dollar index continues to climb. Very paradoxical when you really look at it. And I think this is happening in many things in our world today. For instance, like mortgage rates rising at a pace like we haven't seen in a while, but yet it's not cooling off a lot of the local markets. You've got cash buyers coming into the local markets that are continuing to drive house prices up.
You know, I was talking to a friend of mine who works here who comes and does this show occasionally. His name's Robert. He looks a lot like you. And he told me once the thing about the U.S. dollar is that the dollar index is an index. We're talking about a basket of currencies and the dollar's relationship to it. So if the U.S. is inflating, which the Federal Reserve seems to be telling me it is, at a very measurable rate at like 7 or 8% a year, no big deal. If the U.S. currency is inflating and the dollar index is going up, maybe that has more to say about where we stand in our relationship to the rest of the world than it does within our own confines. Now, I do think that's a very important thing to remember is we're talking about how is the dollar doing compared to other currencies. Because right here, I just put $75 worth of gas into my 15-gallon tank last night on my way home from work, and that stings. But it stings a lot more if you live somewhere where the currency isn't doing as strong relatively to the U.S. dollar. So I do think that's an important distinction to bring up, and I know you've brought that up multiple times through the years, is we have to remember that everything is relative.
What else might be a little bit paradoxical is the mainstream media apoplectic reaction to Elon Musk taking over Twitter, saying that could be dangerous when things that have happened pre-Elon are basically what they're complaining about would be post-Elon. So I'm going to go ahead and coin that pre-Elon, post-Elon, just like pre-COVID. Right. We talk about pre-COVID as it's this time period. Post-COVID, we're going to do pre-Elon, post-Elon.
I wonder what the tens of thousands of radio and television stations that have been owned by a single entity, Clear Channel, have to say about one guy taking over one media outlet. Who knows? So I guess we'll find out.
So back to the dollar. The dollar's had this incredible rise. It broke 103 today, Wednesday, as we're recording. And from the low this year to where we are today at 103, it's about 8.5%. Well, at the same time, gold from the low earlier this year to where it is today, even though it's pulled back a lot, it's still up about 6%. So you've got the dollar index rising, gold's rising. Well, what happens when the dollar index isn't rising and the dollar is declining on the index? I think that is the catalyst for gold rising, and very likely that you could be seeing a peak in the dollar here at 103. I know we had a little bet going to 104. Possibly it pushes up there.
It took 5 years, but I'm finally going to win that bet.
We'll see. So you've got gold and the dollar rising. Well, what does that mean? Well, over the last 50 years of all the periods where gold and the U.S. dollar are synchronized and rising together, that has foreshadowed a peak in which one? Which one would you think?
Gold.
No.
Really?
The dollar.
There you go.
It's indicated a peak in the dollar when gold and the dollar have been showing similar gains. And what do we have now? We have similar gains in gold and the dollar this year from the lows to the high right now. And I think you're going to have some reversal in the dollar, and gold's already strong. If the dollar was at this 103 number and gold was crashing, you could say, okay, well, doing what it should be doing. But being synchronized like they have been, when the dollar rolls over, which it likely is getting towards the end of this huge rally that it's had, when it rolls over, I think gold is headed a lot higher.
Oh, very likely. Yeah, and I think that's a key thing to remember is we're talking about these overlapping markets over time. You're talking about these massive market moves. I mean, gold started going up at the end of 2015. We're kind of just getting started in that. Granted, it's up pretty significantly. At one point, it was up almost 100%. Silver has moved up 100%. But to see these massive swings up and down, it's not unrealistic. To see these things stagger. We talked about timber going up a year or so ago, and 6 months later gold followed and had a big run up. Now a number of months later we're having this screaming price hike, which looks like it may be coming to an end in the housing market again. Now we're having a dollar rally as the stock market is completely caving in on itself. People are going into a liquidity position. Well, what happens after people get liquid? If they can't get back into the growth assets, they start looking for preservation. You get out of growth, you get liquid. If you can't get back into growth, you start looking for safety. And that's exactly what we saw in the 2008 market crash. Gold didn't start going up till a year or so later, and then finally peaked in 2011. So these things are reactionary and responsive to each other, but not on a day-to-day basis. Look at oil. Oil and natural resources seem to be something that is actually following the dollar up right now, with oil getting very, very close to those all-time highs, at least in the U.S. oil price. And there's more news coming out of Europe about, I believe, Belarusian and Polish pipelines getting shut down as of today, if I'm not mistaken. So we're going to continue to see this crunch in the commodity market. We're going to continue to see a problem in the equities market where people are getting out of speculative assets, which is all the equities market has been for a number of years now. And they're going to get liquid looking for other opportunities. And from time to time, you're going to have run-ups like we had in the beginning of 2022 in gold, where gold goes from 1,800 up to 2,100 in the matter of weeks, not over a long extended period of time that takes 6 or 9 months. The runs up are always fast. The correction periods always take a long time, and correction periods are about finding entry points for the next major run-up.
Well, you mentioned commodities kind of in a weird position right now. Gold's been selling off a little bit. It's below 1,900. I think critical support somewhere in the 1830, 1835 range. Would you say that's probably critical support with gold?
Yeah, absolutely. I think my number is a little bit above that, maybe as high as 1855, 1845. There's a couple points on the chart you can see here that I think would be good places for gold to turn around. And we're seeing the making of some RSI divergence after this big channel breakdown that I think we could see the ball bounce down the hill a couple times with a pretty dramatic reversal that recovers a good chunk of these losses, short term at least. So yeah, somewhere in the mid to low 1800s, I think, is a good landing spot for gold, at least on this move.
We should mention, since we're at about 1880, 1890, that could happen quickly.
Oh, yeah,
overnight,
like 2 days or tomorrow. By the time this show goes live.
Sure, it's true.
Happened to us before.
Right, and before we were recording today, you mentioned something about silver potentially taking a dive too. I'm not necessarily in agreement with that, but let's point out when silver did get hit when COVID happened, March 2020, silver took a big hit. Spot price went way down. Well, what happened very quickly was premiums just jumped right back up to where you couldn't even really buy physical silver close to that spot price. And for the last 2 years, we've had physical premiums on silver remain fairly elevated, especially with some of the coins like Maple Leaves and Silver Eagles. And so even if silver does take a dive into like $18, $19, could be very quick, and premiums don't necessarily follow it down. Actually, you might have a huge demand for silver and premiums actually shoot higher for physical silver.
Yeah, my whole point with silver is this. We're talking about silver from the beginning of March 2020 COVID spike. You're talking about silver going from just under 12 to just under 30. We haven't gone down. Like 23, I know that sounds like a lot, but it isn't. When you're looking at the grand scheme of things, we haven't even corrected half of that when we got down to about 21. So I still think that could come. I still think we're looking at a liquidity push right now where people are concerned about the future and they're uncertain so they don't know where to go. So they're going to get liquid, hoping that there's an opportunity that presents itself. And silver is going to end up being that opportunity. So, yeah, I think you definitely could be right. I have no technical reason to explain why I think $18 is going to happen. I just think that we're going to see a lower low, and that's about where you'd see the next landing spot in the charts if it does push below that. That's your 618 fib at like 1870. So you might actually get the chance to buy Silver Eagles at $25 because they ain't going to be 19. We know that for sure. Not the way premiums have been going, because you can't get them today for 25. That's kind of what I'm hoping for. I guess this is me just being hopeful, knowing that I've still got money that I want to get into the market at a very good price. I just want that price to be a little bit lower.
Yeah, and I think that's the takeaway, is that we are coming under some pressure with the metals prices, and buying today and it goes a little lower, I think ultimately you're going to be rewarded with a lot higher prices to come. So this pullback in the metals is a good opportunity to be buying gold, silver, and I would say even platinum. So if silver were to come down to 18, 19, I mean, again, it could happen very quickly, and that's going to be, I think, your last opportunity to get into a lower cost basis before it heads higher.
Yeah, speaking of platinum, platinum's at its Maginot line today. Platinum's at the line in the sand. We've come back to 3 times. It was a ceiling before the breakout. It's now a floor. We've touched this floor 3 times. So we'll see in the next couple days what direction platinum's going. But if the metals continue down, gold, silver, then platinum's probably coming down with it. And I think we may be looking at another $50 or $75 down. However, we could have a turn later this week. So I'd pay attention to platinum. I did pick some up yesterday. I like $900 platinum. I would like to see $750 platinum. I don't think that'll happen, obviously, but
it could come down into the 800s.
Sure.
But I think ultimately platinum's headed into multiple thousands of dollars. I think something like 12% of the world's platinum comes from Russia. That could put some strain on it. There's some increase in investor demand for platinum. I think investor demand doesn't make up more than 11 or 12% of the demand for platinum. And as you have an interest in real things becoming a major theme in the investment world, with all the other options kind of being either overvalued or not attractive for income purposes, when investors do turn to physical items, maybe they think of gold and silver first, platinum may be number 3, and so your investment demand is going to pick up with platinum, especially once the price gets a little legs under it and gets above 1200. You're going to see a nice run in platinum.
So as we wait patiently to see what opportunities present themselves in this extended compression zone that we've been in now for 18 months in the metals market, encourage people to stay vigilant, paying attention to these market moves, because remember how quickly things move when they do. So we'll certainly help you with opportunities to build out your precious metals portfolio in the most efficient way possible that will benefit you going forward into the future. If you'd like to speak with one of the advisors here at McAlvany ICA, we can be reached at 800-525-9556. You can also find more info on our website, McAlvany.com. We're on Twitter at ICA Gold or Facebook at McAlvany Financial. And as always, there are subscribe buttons and bells if you'd like to hear us again next week.
Thanks for listening. Have a great week.